This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 117.24, show 556. And today the market indexes are starting out a little weak today.
Yeah, they're a little bit on the weaker side today, Kerry. We have the technology sector leading us down. They're trading down by about 1.1% as we speak. But the volume trends are very, very light. So markets have a tendency to float back up as we get into afternoon and later day trading. So we'll see where we settle out. But we're definitely looking at a little bit of weakness here this morning. All in all, at least at this time, the major indexes have been in a pretty tight range since mid-December. So overall, when you look at the S&P 500, this isn't anything, drastic or terrible or even that terrific. It's just a lot of chop. And please remember, this Friday's options expiration for the month of January. This is a time to watch for a lot of institutional game playing. This is the week of rumors, wacky news, ridiculous upgrades and downgrades. In other words, expect the unexpected. You're going to get a lot of choppiness into Friday with the first options X of the year.
All right, so options X, and we got a retail sales report today.
Yeah, I got a retail sales report this morning. It was stronger than expected. This is signaling that the consumer is still strong, and they might keep this kind of news might keep the Fed from cutting rates. And that's probably part of the reason why we're seeing the markets under pressure today. Now, everybody should remember the next FOMC meeting is going to be on January 31st. A lot of people are thinking the Fed is going to cut rates. I personally don't think they're going to do anything. I think they're going to sit tight and not cut until the middle of the year, if at all. So, again, the market right now is just waiting for those rate cuts. And that's really why you see almost every dip get bought after, a 2 or 3 day pullback or a 4 day pullback. The market is really anticipating that Jay Powell is pivoted and he's going to start cutting rates aggressively. Some people are actually talking about 7 rate cuts this year. I don't even see 2 rate cuts, but we'll see what happens.
Well, mortgage rates have come down, right?
Yes, mortgage rates have definitely come down. Rates in general have come down. And you also have the 2-year note yield really tightening up with it. It's still inverted to the 10-year, but it is definitely a much, much tighter spread now. And a lot of people are, rejoicing over that we, might no longer have an inverted yield curve. So that's where we are right now. I'm not so sure that's going to happen so quickly. Today, you have the 2-year Treasury note yield up about 13 basis points to roughly 4.36%. Now, we're still well below the Fed funds rate, which is at 5.25%. So the Fed has wiggle room here, but I don't think we're going to get an inverted yield curve that easily. So, markets always are looking forward, always hoping, and, we'll see how it plays out in due time.
Yeah, well, I think it's interesting to see, hey, everybody's living on credit cards, and they keep offering me more and more of them, and I'm what you call a mileage hoe. I look for the maximum number of miles, and then I take out the card. And then after I get my bonus on it, I downgrade the card so I don't have to pay an annual fee on it. And that's how the game is played. But as long as they keep giving the credit cards out, the economy will keep chugging along, right?
Yeah, and I think that's what they're going to keep doing. I don't see that stopping. I think we've already crossed the Rubicon, and the only way – there is no way out. You're just going to, enjoy the game while it lasts. And, we got a few more years of it. So let's enjoy it, I guess.
Take advantage of those balance transfers, right?
That's right. It's very reminiscent of what we saw in, 2006, 2007. So, but this time around, we do have a more accommodating central bank. And, that is, the so-called short-term saving grace. But in the longer term, it will be problematic. But right now, I think that's the name of the game. Ever since the March of 2009, name of the game is just cut rates and raise them when you can, and then cut them back down, and just keep the game going and never-ending short squeeze.
Got it. Keep the game going. So oil today's selling off.
Yeah, we got some weakness in oil. It's down by a little over 1%. Oil is really something you got to watch here closely, because if it takes out that December low, and the December low, if I'm not mistaken, was around $67.71. Right now, oil's at 71.5. But if we take out that low on a weekly close, that's going to send a major sell signal, and oil will probably plunge to the mid to low 50s. So that's worth watching. But right now, it's still above that big level at 67 and change. So we don't have a problem yet. But oil really is struggling to get anything going, even with all these geopolitical events taking place right now. So that's worth watching. But today, it's definitely on the weaker side. Energy in general is on the weaker side as well.
All right. Well, you know what I find interesting, and oil and gold both, whenever they look like they're going to break down for the past couple of months, maybe 3 or 4, we have some geopolitical event that sends them climbing higher.
That's
right?
true.
Have you noticed that?
Yes, I have noticed that. And that's why I'm so technical about the levels, because I was just in crude oil personally, and I sold out of the position because the chart just got very sloppy looking. I like crisp, clean patterns, and the chart got sloppy looking, but it still theoretically can go back higher. It can go back up. But I have noticed that, and it seems, especially gold, Kerry, every time gold looks like it's on breakdown, something happens and it reverses 2%. You know, it's quite remarkable. We've seen it quite often.
Yeah, we saw it just a couple weeks ago. It was the latest move. You know, it looked like it was heading down under 2,000. Boom, I don't remember what it was. You know, it's ships being attacked in the Red Sea, whatever it was.
Yeah, right on December 13th. Yeah, we got below 2,000, got to like 1988, 1987. And next thing you know, the next day we're back to 2040. You know, it was incredible.
Yeah, so but oil's just kind of shrugged a lot of it off, but it hasn't broken down yet.
No, it hasn't broken down yet, but it's just a chart that really is chugging along here. You would think with all of these geopolitical events that are taking place, oil would be soaring and roaring at the moment, but it's not. And, you know, we hear 1 minute that OPEC and OPEC Plus are going to have further production cuts. Then the next minute you hear that, you know, Saudi Arabia says we'll provide oil for everybody. You know, it's just a lot of, it's almost like watching the Federal Reserve jawbone. So, you know, when you get all of this stuff, it just causes a lot of chaos on a daily chart. The weekly chart is still slightly constructive for upside in oil, but the daily chart is just absolute chaos right now.
Yeah, well, I guess we're going to find out one way or the other. It's a gold's under pressure, down again today.
Yeah, gold's down nearly 1% today. And again, you do have some daily chart support for gold futures around 2,000. That level is just a daily level, so we'll see how long it gets defended. The next big level after that is going to be 1,900. And if it doesn't hold 1,900, then, Kerry, we're going to probably see a much deeper decline. But like you said, gold has a way of falling and then rebounding. This is Options X, which is notoriously a sell-off period for gold, and we are seeing that so far this week.
All right. Well, interesting that, you know, the markets, you think you understand it, and that's when they come and bite you.
Well, I have to say, Kerry, that's why we have to use technicals. That's why I tell everybody, learn how to read charts, because do you know how many people or how many emails and phone calls I receive about people that thought the market was breaking out back in early December? I can't tell you the number. And then again, they thought it was breaking out on the 27th of December, the latter part of or towards the end of the year. And here we are back down, you know, testing the 2,000 level again on 2 false breakouts. But this is why you use charts. If you use charts, you wouldn't have fell for those breakouts, and you know, you'd be waiting for an opportunity now.
Yep. Interesting. And silver is getting slammed as well. Silver's been really weak.
Yeah, silver has not been as strong as gold. It's been lagging. And right now, when I look at the silver chart, we're still into a little bit of daily chart support here, currently sitting at around this 2250 area. But the next level is probably going to take you down to 22. And then if you get the chance to ever get silver at 19, that's your next and your last shot, because silver will be a rocket ship after that.
Hey, and I'll just put in a good plug for my friends at Miles Franklin, Andy, personal friend of mine, but long before he was a friend, I was buying all my metals from them because I knew that, I would always receive it, and good guys there. So if you're looking,
I've done a fair amount of business with Andy myself, and he's always delivered.
Yep. And now a transplanted Floridian as well. So
got out of the cold. He had to get out of that cold. And with the rest of us down here.
Those nice winters in Minnesota that make you wish you were on a tropical island somewhere.
There's only so much ice fishing you could do over there, Kerry.
Yeah, and skiing and all that good stuff. So finally, Bitcoin. What's up with Bitcoin? It's been weak. We so nailed it when that fake announcement came out, and it should have spiked substantially, and it didn't. That was the signal, time to exit.
That was the tell. And the next day when the news did come out, you did get a little bit of a spike. You actually went right up. Bitcoin futures went right up to the 618 retrace. And this retrace goes back to the November 21 top when Bitcoin was trading at 69,000 to the dead bottom low, which I believe was November 2022 when Bitcoin traded under 15,000. So we went right to the 618 retrace at around 49,000. And we pulled back quite sharply from there. Now Bitcoin sitting on the futures, at least, at around 42,600. I think we could go down and test on a daily chart 39,600.
Hey, and, my friend, I was talking with him about the ETPs. He wasn't really concerned. He says that Fidelity guarantees they will have the Bitcoins there, that their fund is backed by, they call it a physical ETF, and it's a cryptocurrency. How could it be a physical, right?
Yeah, it's I've been reading a bit about it, and basically there are some different rules and laws in different parts of the world regarding exchange traded funds, and this obviously a non-fund and exchange traded product, definitely has to follow different guidelines. So you got to read the fine print on these. Yeah. I'm sure a lot of people feel very secure because companies like BlackRock and Fidelity and others are involved. But, when what hits the fan, Kerry, we'll see how good these products really are.
Yeah, I'm going to read the offering statements. It sounds to me it's just like GLD and SLV. They have it, but they don't have it, but they can get it if they need it, but they don't need it. It's like a
right. It's a lot of leverage. It's a lot of leveraging and promises. So, I did do a little bit of reading on this over the weekend just to see exactly what an ETP is. And, again, it does trade just like a stock, and that's, the easy part. But there are some underlying differences that everybody has to check out. And it comes down to a lot of counterparty risk and third parties and derivative transactions. So, just be aware of what you're getting into. I think it'll be fine for the near term. Who knows what it'd be like if there's ever, a big crash or the grid goes down, and we'll see what happens then.
You know what I think is going to happen next? I think they will legalize Bitcoin crypto options. All right. And when that happens, man, it's off to the races.
Well, that's definitely coming, if not already here. I would think that's in the cards pretty quickly, because you can actually buy calls and puts on BITO, which is Bitcoin futures ETF. So you could actually do that already. So the options market is definitely waiting in the wings, so to speak.
And then at that point, it'll be just like USO, right? They don't own a drop of oil. It's all derivatives, the derivative portfolio. So,
Well, when you look at these products here, the one thing that gets me a little bit concerned is that there's so many people in this market. I mean, they approved 11 of these things.
yes.
So that's quite a bit, and more, in line for an approval as well.
Yep. All of these. And yeah. And one thing we know is ignore the headlines. There's another reason, and it's not in the headlines. So we'll leave it at that. In any event, go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. The Twitter feeds are at ITMS, at Nick Santiago 01, at Kerry Lutz. And emails are welcome, kl@kerrylutz.com. And please write your comments below on the YouTube channel and like, share, and subscribe and all that good stuff. And Nick, we'll talk to you on Friday.
Sounds good, Kerry.